Welcome to the Juice Radio Talk Show. 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 Reality TV, church reviews. Let's talk happy love and marriage lifestyle. Come and talk with us. Come and share with us. Come and laugh with us. Come on and pray with us.
Regina Clovis, special guest. You should be following your lead. Bless. Subscribe on YouTube. Listen on podcasts. We live on IG and Facebook. This episode is sponsored by Truth and Triumph Ministries.
Well, good morning, good morning, good morning. I know most of you are saying, what are y'all doing up so early? Listen, we are here to tell you about our Money Monday. Listen, the series normally does start at 12 noon. We had some appointments that we both have to do this morning, and we didn't want you guys to miss out on your Money Monday. So we're coming early just today. Our regular programs will resume at 12 o'clock next week, Monday afternoon, Eastern Standard Time. But let's go ahead and jump into this Money Monday series. This week, we're talking about credit scores. Credit scores, what do they really mean? And for those of you who are just joining us, I'm Regina, one of your super co-hosts here at the Juice Radio and Talk Show. As you all know, on this channel, we're all co-hosts because Jesus Christ is the real host of this channel. Joining me again, as she always is, on Money Mondays is Pastor Tawana Grant. Hey, Pastor Grant, how you doing?
Hello, good morning. Blessed Monday to everyone. And we are so excited. We're coming on early, but the early bird catches the worm.
Hey, that's what's going to happen. All right. So appreciate you being here, Pastor Grant. Pastor Grant is sharing her knowledge of finance. And, you know, I love it. I have been learning so much as we've been doing this. If this is your first time being on the Juice Radio and Talk Show, one of our live programs, then you want to do this. You want to go back and review some of our past videos and get that same knowledge that so many of our other viewers have already gotten. Listen, it's valuable key information that will help you with your finances. And do this, share it with a friend, because I'm sure somebody else can really learn from this knowledge that Pastor Grant is sharing with us. All right, you guys, today's message is credit scores. Now, you all know we're on this credit thing. Let's get this thing together. Let's get it right. And for those of you who feel like, oh, my credit is just down, there's nothing else I can do. No. We're not going to have that thought mentality. We're going to go ahead and give you some key things that maybe you could do to help change that. You're not the only one who's been at that predicament. Come on now. You're not the only one that probably had that score. But listen, like so many others have done, they've changed their scores. You can do the same too. But we want you to know what these credit scores mean, not to get you down or depressed, but to get you the knowledge that you need, because every score can come up. Just like every score went down, every score can come up. Pastor Grant, again, thank you so much for joining us on this wonderful Monday morning. I'm ready for this Money Monday knowledge that you have. Let's go ahead and dive into it. Tell us why you wanted to talk about credit scores.
Well, I think it's so important that you know what you're working with, right? So it's just like needing to have a recipe to make the cake or a recipe to make your favorite dinner. You need instructions. You need information in order to do it well. So the same is with credit. Credit score, having the information and knowledge what are the attributes, what are the categories, how do you maneuver to improve, which is what we just stated. Wherever you are, there's opportunity for improvement. And so this is the type of information you need so that you can start making informed decisions, right? It's about making decisions with information versus on our feelings. And so that's why we want to share that today, because we're talking about credit. We're in our learning series to understand how do we go to the next level in our finances. And so this is one of the bases. This is what the world uses. So while we might say, I want to hide, I want to stay in my shell, it doesn't matter. This is what the world uses, right? When they're looking to extend you opportunity of use of funds, the opportunity, purchase a home, purchasing a car. I'm doing something that will not just cash, right? So when you're looking to get a credit card, this is what they use. This is the tool that they use to evaluate and assess on whether or not they're going to give you a yes. And we want to operate from the posture and the perspective that we always want them to say yes.
Absolutely. That's That part. We always want them to say yes. And for them to say yes, you guys, you're going to probably have to start saying no to some of those purchases that y'all are wanting to do. Okay.
Right, right.
It,
Yeah,
you
we
know, it
said
just
that
may be
before.
temporarily. Yes. Go ahead, Pastor
Yeah,
Grant.
even temporarily, you brought up a point because when you are getting ready, it's just like when you're preparing, parents preparing for the birth of their first child, right? There are
Mhm.
things that you start to do in preparation. You start, one, getting healthy. Young ladies taking care of health. They're starting preparing. They're starting to get the room together. They're doing all these things in preparation for what they know is yet to come. The same as when our credit is when we're getting ready and we know we're launching out. You might be getting ready to make that first major purchase. You might be getting ready to start your first business. You might be getting ready to expand.
That's
Right.
right.
So in whatever area you're intending to do that, this is the time when you revisit, you refocus, you reframe, right? And so that you're ready. So when you do go out to start making the next portion of the movement, things are in alignment. You are prepared. You know what to expect. You know what to look for. You know how to answer and address, right? And you do
Mm.
that because you have a basic knowledge of how it works.
I love it. And we also love to say hello to our other super co-hosts. That's you who are viewing right now and in the chat. And this morning we've got Tammy. She says, good morning.
Good
Morning,
morning.
Tammy. Thank you for being here. Listen, and while we're viewing this and having this great video of credit scores, if you are in the chats or if you are viewing and you have a question or comment, go ahead and put it in the chat. But remember, on this channel, we're nice over here. We're nice, okay, and respectable over here. But we would love to hear your feedback this morning as we have this conversation about what credit scores really mean, okay? We love you for being here. And look at it this way. You are all our super co-hosts as well, okay? So, let's go ahead and have the conversation. Pastor Lorenzo is up bright and early with us this morning. Hey, Pastor Lorenzo. He says, good morning. Good morning
Bless
to you
you.
and your beautiful wife, Greta. I love it. So, Pastor Grant, looking at credit scores, so many people, again, don't know what the credit scores really mean. A lot of people have a lot of buying power, but because they don't know what their credit scores is, they think they don't. I pulled up some information actually from the Credit Financial Protection Bureau online, and I just wanted to read this and I'll turn it back over to you. It says this about what is a credit score. It says a credit score is a prediction of your credit behavior, such
Yeah.
such as how likely you are to pay a loan back on time based on information from credit reports. And it also said this, which I thought was interesting. It says on here, it says this part, the part that I wanted to pull up was here, credit behavior. It says tip. There's a tip that it says the way you use and repay debt affects your credit scores. So your score can be helpful in tracking and improving your credit use and behavior. Paying loans on time, staying well below your credit limits help you get and keep good credit scores. Now, the reason why I wanted to bring that up is because that word behavior came up twice.
No, and that's very true. It's like someone reading your narrative, but it's your financial story, right?
Mhm,
So
mhm.
sometimes we put more emphasis on our narrative in other areas of our life, but this one really impacts how we're able to gain position on our
Mhm,
finances. And so
mhm.
we talked about that before. This is what people go and read. It's like a story, and they're trying to evaluate how well have you behaved in the past because it is an indicator. It is
Mhm,
exactly what you read. It is an indicator. If you haven't paid well before, it is most likely,
mhm,
right? It
mhm.
is most likely a predictor that you will continue that pattern until, as we were going to talk about today, we change our behavior and then we do it long enough that it starts to refine your story,
There
right?
you
So that
go.
it starts to tell a different narrative. And we all have that opportunity to change our behavior, to change the way we think. Really, a lot of it, we started off early on, is about our mindset. How do we view money? How do we value money? Do we look at it as a seed? Do we look at it as a beginning point to help us to get to an expected end? And so when we look at it from that type of reference, we handle it different. Anything
Right.
we value, we handle it different. when we don't value, it's just the same thing with your reputation. When we don't value our reputation, we don't care what people say, we don't care what we do. But when we value it, we make decisions that put us in those guardrails that are expected based on the image and reputation we want to have, right?
I love it.
So when we're doing our finances, the same thing. What type of reputation do you want to have in the financial world? Do you want to be known as somebody who's trustworthy, who has integrity, who stays in alignment with their commitments? And when you want that, you act accordingly.
I love that. I love that. So let's go ahead and jump into the meaning of these credit scores. And a part of this from this website that I pulled up, also the Consumer Finance, it said your credit history and behavior form the basis of your credit scores. I can't stress that behavior part enough, because I know some of my own behavior impacted my credit scores in a negative way. And then, like you said, when I changed the narrative, I was able to have that behavior change, and that behavior change made my credit change. So talk to us a little bit about this.
No, so it's so true. So what happens, again, we talked about before, there are three major credit score rating financial divisions that you can leverage. We talked about how you can go online and get all of your credit reports for free every year. Please make sure you do that. That is a good starting point, because you want to know where you are. It's hard to create a new trajectory to go to a new destination when you don't know where you're starting from. So you need to know, where am I right now? And so what we're doing today is helping you understand, once you get the credit report, what does it mean? So the three credit reporting agencies, again, you can get it for free. Most credit scores range from 300 to 850. There are some different parameters based on that credit rating organization, what they want to use. But note this, that credit score impacts your ability with lenders to get approval on mortgages, on loans, right? On personal credit, on credit cards. And we talked about it before, it impacts your interest rates. So the better your credit score is, the higher, the more likely you will have a more beneficial interest rate, right? And so you want to pay less for the use of their money. You want to pay less, and that gets you in that posture by using one of those three: Experian, Equifax, or TransUnion, right? Using one of those. They take a model, right? So a model is certain levels of categories, right? They use a model, and based on those categories and percentages, that's how they craft your score, right? So let's talk about what is in the score, right? So again, the scores typically range from 850 rather, it's the top, 850 is the top, down to 300, right? What do they look at? They say, what is excellent credit? Right? So because we want to give you what you want to shoot for. You may not be there today, but this is the thing. Once you start to use the wisdom and the knowledge that we're giving you and start applying it, right? What is wisdom? It's knowledge applied. So applying what we know to our life is applicable. Then we will start seeing the rewards of it. We'll start seeing the numbers start to go up, right? So 850 to 800, they pretty much consider that is excellent credit. If you're in 800, 850, that means you have been judicious in ensuring you meet your obligations. You've been paying on time. You keep a low amount of balance. What is very good is 740 to 799. Again, most often, if you're in the 700s, you're still in that good area. And so you should still be able to obtain credit. You still have leverages sometimes on the interest rate. The higher, again, your credit score is, the lower your interest rate on lending the money. We consider to be good somewhere between 670 and 739, according to FICO, right? They look at that, they consider that to be good. Fair is between 580 and 669, and then less than 580 is considered to be poor. And so again, all of us have started somewhere. Think about it, when you didn't have any credit at all, right? And you had to build credit. You're starting from where you are. And so we want to acknowledge that, because all of us have had an opportunity in our lives. Sometimes it was medical bills. Sometimes it was the loss of a job. There was some incident or event that occurred and that created some turbulence in our ability to pay. And so we may have to be bouncing back today from where we are, but there is room, right? And so we want to acknowledge that there is room for you to improve. There's no reason why we can stay there, right? And say there's no opportunity. Yes, there's opportunity to improve.
I love that. And again, I'm loving, I want people to understand, and I love what you did, and I want people to see this. Pastor Grant started from the top number, and then she spoke about going down. And the reason why she did that is because she wants to give you a goal to look forward to. I love that you didn't start from the bottom, because a lot of people, when they start talking about credit scores, they will start from the bottom. But what you're doing is you're putting the mentality into the viewer's mind to say, listen, I want to start at this point because this is a point I want you all to get to, that 850, that higher credit score. I love that. And again, listen, there are tools and tips that you can use to get back up to these high credit scores. You could do it. A lot of people may be saying, no, I don't think I can. I'm too far gone. Listen, you're still here. You still have an opportunity. Just change the behavior. Change the behavior. And part of changing the behavior is changing your mindset about even yourself.
Yes, that you can do it. That's so important, that I can do this, right? We set out to do other goals that at some point in our lives seemed to be difficult or hard to achieve, but we did it. And so in this manner too, when we want it, whatever you give focus to, you give it strength. Whatever you give attention to, you give it strength. And so when you give attention to your finances, then you can prosper in that area. So what are those factors we're talking about? What is it really that impacts that number? What influences that number? One of the main portions is paying bills on time. So again, a lender or a supplier has given you the leverage, right? Extension of credit to pay them back for the use of whether it's your energy, their energy that they're giving you, the energy bill, the use of gas, the use of their card leverage, right? Which is extended credit, the use of the property perhaps that you're driving in or living in. They have said, I'm going to trust you with this, with the understanding you will repay me. And so paying bills on time, right, as they gain the funding back that you agreed to. Remember, again, that's why we talked about integrity and character, because we're the ones that signed the paper. They didn't make us, enforce us. We did it willingly. So we did it willingly. So now we have to willingly pay them back. Okay?
Yes.
So when we pay on time, that is a significant portion of the percentage of our credit score. So paying on time, that's something we can do right now. We talked about before, just paying the minimum means you paid on time. So you're getting a check on that one. But now the next stage, when you go to the next stage, so we paid on time. The next stage is, how much do I owe? So again, owing out a lot, which is 30%, right, of the credit scoring. So you want to make sure that you are keeping your balances low. It's good to use less than 30%. A lot of them are looking for when you have a 1% usability. You're in a good area for a good credit score rating. So if you're using less than 30%, because normally it's 35%, if you're using 30% or less of your available credit, the more that you are not using, the better it is. And we talked about, again, about spreading, right? Leveraging your use of credit so that you're not maxing out all your cards. So you might have 2 or 3 places where you can get some funding, right? You might have 2 cards. So leverage the cards in a way that it will tell a good story that you're using your credit, but you're using it judiciously. You're not overspending. So we talked about before, for example, if you had $1,000, you put 5 on one and 5 on the other, and you're paying them down so that you're not maxing out the card. Because again, they're looking at what is your credit available to you, and then how are you using it? One of the next things is that they look at credit age. That's why sometimes it's difficult when you don't have any credit or you're just building credit. You might have to get a secured credit card or secured loan because you don't have any history yet. And it's hard for them to use that indicator when you haven't built a pattern. So until you build a pattern, they consider you to be a higher risk. until you build a history that they can refer to, right?
Mhm.
And so
Mhm.
credit age is also an indicator. How long have you had that credit card? And then as you have the credit, how well have you maintained it? You don't want to
Yes.
just obtain. You don't want to just obtain. You want to sustain and maintain, right? You want to be able to get it, keep it, and thrive with it, right?
Now, as you're saying this, the maintaining and the age of the credit, a lot of people, what they do, they think when they're trying to go about fixing their own credit, they get rid of cards. They'll pay them off and then they'll close them out. Would
Yes.
you recommend they do that?
I don't recommend doing that. And the reason I don't recommend it is because in many instances, doing that will limit your credit
History.
availability. Because
Okay.
again, that is an indicator in your overall credit score. So it'll still be there on your history. You still have it there on your history. But what you don't have is that the fact that I still have that available, right?
Mm,
So when they look at how much credit do you have available in consideration of how much do you owe out, you've just diminished it now. So when you
mm.
close that card down, you don't have that available anymore. Your available amount has now just diminished. And you might be
Okay.
right here where before
Mhm.
you had the credit card and it was an open to buy, right? So it's available to you, and and you might have had an owing amount of here, right? And so
Mhm.
with that being said, now you have diminished that amount, and so it's brought it down lower. So I would say, yes, I have that too. I have cards that I've paid off, we've paid off, and they're just there. And I go out
Right.
at least once a year, I reevaluate and I go out and I make a small purchase on them and I pay it off.
I know some people may be thinking they're doing themselves some good when they say, I'm cutting this card up and I'm closing this out and I'm going to help save my credit. But what, and I know what are some of the reasons they do that, because I've done it in the past too. I said, well, I don't want to use it. But what I had to realize, even with my own credit rebuilding, is I cut the card up and I said, I'm not going to use it, but I kept it open. I
Yeah,
kept the
keep it
account
open.
open.
Keep it open. And I can
Yes.
understand that, especially if it is tempting, right? It's
Yes.
tempting for some of us. Put it up in
Right.
somewhere safe, right? And again, this goes back to discipline. We have to be able to discipline ourselves,
That
even in
behavior.
our behavior, right? And so
Yes.
it doesn't mean, cast it away or tear it up and close it out. Don't close it. I would say, again, go back in at least once a year, make a small purchase on it so that it keeps that open to buy available and alive on your credit report. And then it shows again to a lender, hey, they have access to all of this and they have enough discipline not to use it. They
There
have
you go.
access to all of this, yet they're consistently in their pattern and their behavior of how they pay and how they use money. And
Yes.
it will show to the person reading your narrative that I understand how money works. I understand how
Yes.
credit works, right? And
Yes.
so with that's my recommendation. I know people who have closed them down at previous, I would close them down early on until I learned better, right? Until I got more information. And so now
I
that I have
love that.
information, I know how to use it to my advantage. And so
That's right.
That's what
That's
we're trying to teach you. This is how you use that information to your advantage. This is how you
Right.
position yourself for the yes. Because
I
now you
love
have
that.
the card, you paid it off, but that open to buy is still available to you, right?
Now, and you also said this previously. You said this earlier in this video, the percentage of use. For example, if someone has $1,000 credit limit, and they may think, well, I'm doing good because I only use 50% of it. When actuality, what some of these credit bureaus are looking for is the less of that. And you mentioned the 30 percentile of that.
Right.
So people have to get more understanding that even though you're using 50%, it's not bad, but the better is that 30% to try and use no more than 30% of that credit limit. Is that correct?
Correct. So when you look at FICO is as an example, for them, they use 5 categories. When they are evaluating credit and presenting a credit score, they use these 5 categories. One is your payment history. That is 35% of it. How well have you paid? What is your prior narrative? The next one is credit utilization. It's 30%. It's 30% of your score. How much of the available credit to you are you using? Because if you're using a lot, it is an indicator of your ability to discipline yourself in that space, right? And so if you're capping out with them, then the likelihood is that you'll continue to cap out. So it lowers your score by more utilization. And so that's what's spread it out. Sometimes that is much better because if you have 2 or 3 cars, you're not using all of the limits, right? And it to your available credit, your score is lower. So it is helpful when you do that. The next one is the length of your credit history, which is 15%. How long have you had credit? That's 15% of it. The longer the credit history you have, the higher the score will go, right? The mix of your credit, what types of credit is 10%. What type? Do you have a home loan and a car loan and a credit card? What types of credit have others extended to you? Because that shows your ability, right, to obtain credit worthiness with others. So what is your mix? And then 10%, your new credit accounts. So it counts 10%. What have you recently opened? Because a lot of times they look at that. Have you just opened up a lot of cards? That creates a risk indicator because now you have a lot of extended owing, extended debt potential, right? So when you open up a lot of cards at the same time, your credit score may dip. You'll see this when you go to make a major purchase, right? And it may dip for a minute and then it goes back up. So again, I want to give that commentary because just because it dips for a minute, it'll go back up once you pay down on some balances, once you settle out and show history again with that new credit line extension, right? That new thing you just got, it will start to level back out because now you're paying at another level. So don't carry too much weight or anxiety. Trust me, I was at that point one time when I was really, really monitoring. I was like, oh, it went down 5% from last month. And I'm like, oh. And then, but once you're in certain ranges, right? You're in the 100 range, rather 800 range, you don't have to worry about it. It can go 805. It can go 810. If you're in the 790 range, 750 range, and it goes to 760, you're still good. It goes to 780, you're still good. Those fluctuations will happen monthly as you make purchases and as you make payments. You'll see minor fluctuations every month. I do because most of for us, financial things that happen on a monthly basis, I'm normally managing. So his will go pretty much, my husband will go stable for months until we do something and leverage his. But for the most part, it'll be mine that does the small ups and downs, right?
I love this. I'm looking at the FICO score on the Mr. Google here, and I'm loving this because it has this variance of each of the credit scores. Like it says 800 plus, like you mentioned before, is the exceptional. The ratings, the exceptional, and the definition it says here, it's well above average, and it says demonstrates to lenders you're an exceptional borrower. And then it goes over to what you mentioned before, the other scores, the very good, the fair, and the poor. And I love that because, again, we have to demonstrate, like you said, to the lenders, to the people who have the funding that are loaning to us, what type of borrower we are. And we want to get to that exceptional part. And again, I can't stress enough, behavior. Let's change the behavior. Pastor Lorenzo said this, and I wanted to bring it back up. He said, wisdom is knowledge applied. That's a word right there. Absolutely, Pastor Lorenzo. And he also says, this is good information. All right, so Pastor Grant, let's go ahead and continue. And then I want to move over to what we can do to rebuild these scores. So if you would go ahead and continue with this valuable information that you have to share with us, I'd appreciate it.
Yeah, so we talked about those levers, right? So again, payment history, credit utilization, length of credit history, the mix of your credit types, and recent applications. So again, I'll just give this tip. When you are trying to purchase a house or purchase a car and you're going to lenders and you are filling out applications, try and do all of them in the same period of time. Because to a lender, they will know that you're going after a major purchase because they're all happening within that short period of time. And that tells a story versus going 1 month to try and the next month to try. And so to a lender, it looks as if you're going after a lot of new credit applications, and that's pulling that number further down. So you'll take a smaller hit if you're doing it all together versus spreading it out like that. So that's my recommendation. I also ask people to do your due diligence before you go to gain credit. Look inward. Are you part of a credit union already? Does your organization provide you with some advantage to going through them? Maybe you work in a organization that has relationships. Oh my goodness, leverage your relationships.
Yeah.
Relationships with a bank or with a financier or with some other investment instrument that could be an advantage to you. Take advantage of those relationships, things that are being allowed and afforded to you. They're not mandated. They're not mandatory that you use them. But if they're going to give you a 5% discount, or they're going to give you some other early, credit or some extended benefit for going to them first, and with the company you already have a relationship with, try them first. I just know of someone recently who went through a credit union, was able to save several points in interest rates.
There you go. Yes.
And so I want to add just a tip: evaluate what you already have available to you. If you're already with a banking finance institution and you've had history with them, you get those notices sometimes in the mail that says, we have this available to you to apply. Try and leverage someone where you already have a good relationship with. In most instances, it will make the process to approval faster. It will make the process to approval easier. So that's my tip. Try and leverage those relationships that you already have that can afford you the opportunity for that major purchase, and they already know your history, right? So that's really good.
Let's talk about these inquiries real quick before we go to your next topic. There's a lot of information. For those of you who are just joining, this is a series that we're doing on credit. This is a series. So we're going to be back on Monday with another topic on this. But real quick, Pastor Grant, if we can go back to the inquiries, I do want to point out that the credit companies are trying to help buyers to maintain good credit scores by changing some of the things that they do. Like you said, inquiries when people inquire for a mortgage or car. Now, I know with mortgages right now, if you're looking to purchase a home and you do an inquiry where a lender pulls your credit, the first pull that they do on the mortgage, in mortgage company, the first pull that they do, the credit bureaus are now allowing you to pull your credit with other lenders for mortgages within a 30-day time frame, I believe it is, without really impacting your score.
Yeah, that's what we're saying, doing them close together, right? So you add the benefit of not having multiple hits. So depending on some companies, right, some credit cards and some others might do a soft hit. Again, when you have a relationship, they don't have to do a hard credit inquiry because they already know you. You already pay with them. But some do have to do a hard hit. And again, I recommend that if you're going to do that, do them in a small period of time. Don't do one this month, another next month, because again, it can degrade your credit score by doing that. Try and do everything right there together.
So basically be diligent. And when you're about to make that big purchase, do your homework before you do it. And then go ahead and start the process of, going to these lenders and try and get it done within that time frame. Right now, I do know the mortgages, from my understanding, is that 30-day time frame. I love it. All right, Pastor Grant, go ahead. I just want to put that in there because I don't want people to be like, those inquiries can really bring your score down, guys.
Yes. I know one report from FICO says that when you do a hard inquiry, it can shave 5 points off your score. So that's why we're trying to say, if you're going to do it right there together so that the lender and the reporting agencies know that she's looking for a car. Because why? Because there's 2 car places have hit at the same time. And so there is an understanding there, and you're not getting a hard loss on multiple hits. So I would just say, again, try and do it right there together. It says make sure that you benefit by that 30-day check, which is what Regina just mentioned. Try and do everything in those 30 days because, again, it looks to the reporting agencies. There's an understanding that is the category this person is pursuing. And so all of those fall into that same hit. You're not getting it multiple times.
That's right. And you know them five-point pools. You could do 10 of them. That's 50 points right there.
That's
So
it. That's
be
it. And it
careful
means
with
a
that.
lot. Yeah.
Yes,
So
I
we'll talk
love it.
about, real quick, some things you can improve to
Yeah.
get your credit score in a better position. One is pay the bills on time. I know
Come on
that
now.
sounds simple, but it can be hard, right? It can be hard if we haven't set our budget. So that's why we talked about that in the beginning. First thing is understand what do we have to work with. And so when we know what we have to work with, now we can set a good budget, and then we can be diligent and maintain our budget so that we can pay our bills on time. Don't go and get further extended credit or create another bill when we know we're already having issues with the ones we have. We're trying to create a gap. We're trying to create a gap. What is the gap? The area between what we owe and what we have. The larger the gap, so it's more for us to use. So don't go out and extend ourselves any further until we've met our initial goal, right? So pay our bills on time. Next one is keep credit balances under 30% of their limit, ideally much lower. That's why I said ideally much lower, 30% much lower. So that in that way, when they are calculating our available credit to what we owe, it doesn't diminish our credit score. So again, keep it lower than 30%. Another one is to keep older cards open to protect your average available credit limit. We just talked about that. So again, don't close them down, pay them off, and then set them aside. Pay them off and then set them aside. Again, I do that. I have several cards. Don't use them, right? There are 2 or 3 that are my primary, and I use them for certain things. And so that I can own and manage my money. I don't want my money to manage me. Some of us, our money is managing us. It's having us spinning. It's having us spinning. It's our habits and behaviors are having us in a spin, in a churn, in a swirl. And so I want to manage it. And so with that, you set them aside. Pay them off, set them aside. I go back to them, like I said, because I want to keep them active. I'll go back. I'll buy something small. I make sure I go back and I look through the ones that I don't use normally. I said, oh, I didn't put anything on that this year. I got to do that. And I'll do that as a point of reference to make sure that they know I want to keep that credit line open. So again, keeping older cards open to protect the average age of your accounts, right? So it's doing twofold. It's keeping that average age of your accounts. So when you look at how long you've had credit, those older accounts do matter. Those older do help, and then keeping the balance low, right? And the mix that you have is very helpful to you. And then again, spacing out credit card applications. Again, we talked about making it a short period of time, right? If you're going to be applying, you want to do it very quickly in that short amount of time. Less hits on your credit score.
Tammy put this in the chat. She said, I just talked to a mortgage lender to see what I could work with, and my credit score dropped 6 points. What happened? And Tammy, 6 points, that wasn't even that bad, because some of them hit you real hard. Pastor Lorenzo says, I've been in banking for over 30 years. Pastor Grant is on point. Yes. Pastor Grant, more tips for the people. And you all who are just coming in and viewing, this is our Money Monday. We're normally on at 12 noon Eastern Standard Time. We're here early this day because we did have some appointments we have to get to, and I didn't want y'all to miss out on your Money Monday information. So Pastor Grant is going to continue. We're talking about the credit scores and what do they really mean. And I'm loving the valuable information. For those of you who are just tuning in, you want to go back to the top of this video once we end this live and get that refreshing information that's going to help you and others. And remember to share and click like and click subscribe on the Juice Radio's YouTube channel. Okay, click that subscribe button. We would love to have you to join us here at the Juice Radio and Talk Show by subscribing to our YouTube channel. Pastor Grant, let's proceed. Listen, I'm all over this other laptop over here looking up this credit stuff. I'm like, what can we do to better our credit scores? Yes.
And so it starts today. This is if we don't leave with any other note to everyone, it starts today. So if you put off, you'll never receive the benefits of it. If you wait and keep saying, well, I'm not ready. You have to make up your mind that you're ready to go forward. Make up your mind that you're ready to be diligent in that. Just like we make up our mind for anything else. Anything we want to have, you go after it. You are a winner. You are a champion. You achieve it. we can achieve greatness even in this space, right? And so we have to make sure we set our minds that I can do this. I can do this. And then you're not doing it alone. You have people like the Juice Radio and Talk Show who are here to give you enablement and information to help you win. And then you have other opportunities to free information. Again, if you go on any of the 3 credit reporting bureaus, they have free information. If you go to your own banking institution, they have free information. Why? Because when you win and do well with your funds, they win.
They win.
Everybody wins. So credit card lenders, they have free information. So you have access. You have access. Now it's up to us. Now it's up to
do our part. I love that. You've been listening to Pastor Tawana Grant here on the Juice Radio and Talk Show, our Money Monday series. Listen, join us every Monday at 12 noon Eastern Standard Time to get your information on what we can do to help improve our financial health. Listen, we're all about health on this channel, and finances is part of that process as well. You all want to join us Monday afternoons for our Lunch and Learn, 12 noon Eastern Standard Time. We did come on here a little bit early today because, again, we do have some things to take care of, but we did not want you to miss out on this valuable information. Remember, we would love for you to subscribe to the channel, to subscribe to the Juice Radio and Talk Show, and get your Money Monday series notifications by clicking the notification bell to know when we go live. Thank y'all so much for joining us. We'll get this last comment here. Letitia Rick says, is consolidating a good thing to do? We're going to probably talk about that next week, Letitia. And you want, Latasha, if I'm saying that wrong, I apologize. You want to be with us next week, Monday at 12 noon. 12 noon. Click that notification bell, and we're going to talk about that. Is consolidation a good thing to do? We're going to answer that for you this coming Monday at 12 noon. Pastor Grant, thank you so much for being here again. Thank you all who are in the chat. Listen, we appreciate y'all. Y'all go ahead and get y'all money healthy. Now, your money want to be healthy. It don't want to be sick no more. It wants to be healthy. Your credit scores don't want to be sick no more. It wants to be healthy. And the way you can do that, tune in over here to Juice Radio and Talk Show as we talk about this Money Monday with our favorite friend on this channel, Pastor Tawana Grant. Thank you again for being here, Pastor Grant. We appreciate you so much.
God bless you. Thank you, Regina, and our co-host. It has been a fabulous, outstanding Monday morning. So be blessed on today.
That's right. Y'all enjoy. We're going to say goodbye for now, but don't cry. We coming back next week. We coming back. And before that, if you would like to see more of our shows, click that notification bell because we've got so many other things coming up this week right here on the Juice Radio and Talk Show. But for right now, we're going to say goodbye for now, but we'll be back. Pastor Grant, on the count of 3, we're going to say goodbye. You ready?
Yes.
All right. 1, 2, 3. Bye, y'all.
Bye.
Welcome to the Juice Radio Talk Show. 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 Reality TV, church reviews. Let's talk happy love and marriage lifestyle. Come and talk with us. Come and share with us. Come and laugh with us. Come on and pray with us.
Regina Clovis, special guest. You should be following your lead. Bless. Subscribe on YouTube. Listen on podcasts. We live on IG and Facebook. This episode is sponsored by Truth and Triumph